Back on Economic Buzz, this program can also be seen through StarHub Asia Channel 121 Singapore and live streaming on okzone.tv with me, Erwin Suryabrata. We still have Mr. Vicky Amarnani from Monex Investindo Futures. Many investors are still in the sideline, as you said during the commercial break. Market is getting boring. I mean, the cycle is there.
It's become such that there's so much news out there, but in terms of trading activity, not much is happening because people are on the sidelines waiting for the stimulus, the Fed meeting on the 17th, 18th. How much will they taper assets by? What's going to happen to Indonesia? What are the new policy measures? People are all waiting, and it's like a wait-and-see approach at this point of time. Yeah.
Are our investors here really driven by the news, like what they hear from the media? Has it really driven them to decide or taking an action?
Yes, the market has come currently, temporarily, until they find a more clear direction. Market is driven completely by macro news. I mean, one news like the non-farm payrolls are just slightly lower than expected. I mean, they expected to post 180,000 job growth. They posted 169. Immediately the dollar weakened. Markets thought that they may not taper assets as much. The stimulus cut won't be so big. Then again, if another news comes, then they change the view again. So it's very market driven. Until I think the big date is the 17th, 18th FOMC meeting, where the Fed will decide how much will they cut the asset buying program from. Currently, it's at 85. So if the market is already priced in 10 to 15 billion cuts. So if they cut down asset buying from 80 billion to 65 to 70 billion, I think that's no surprise to market. Or it's all priced in. The 10-year Treasury has approached 3%. So a lot of the negative news has already been priced in because everyone is worried.
Everyone is worried. Everyone is really cautious in terms of taking action or taking a decision. Then, at least, are there any ways we can do in terms of creating a positive sentiment within Indonesian market, particularly related to the investment here?
Yes, I mean, at this point of time, for example, if you ask me about the local stocks with the index trading at 4,100, people can maybe look to selectively buy Indonesian stocks, the blue chip names only, the good names, but very progressively. You can only slowly accumulate. In fact, my suggestion is, because we've had 3-4 years of good growth, I would rather suggest to invest into developed stock markets such as the US, but not at this point. US is a little overvalued. Maybe if they have a good correction of 5 to 7%, I would look to buy it. But one of my other favorites is the Japanese stock market, because now Japan is going through what US went through. Japan is now printing money, more quantitative easing, weaker yen. Weaker yen is good for the stock market because of their export-oriented nation. With the US being their biggest partner and US coming under recovery. So US and Japan would be my favorite stock market picks. For emerging markets, I would be very selective on the stocks, but I would buy very slowly.
With many foreign investors leaving Indonesian capital market, do you think we are able in terms of grabbing the opportunities to attract more local or Indonesian investor to come into the Indonesian capital market, whereas so far it's always dominated by the foreign players?
Yes, I mean more than 50% is. Yes, I mean we have seen growing interest from the locals as well, but I mean maybe the current market sentiment is not so supportive of that, but yes, over time with more education, more knowledge, I think yes, the local stock market would be, more local market participation would be helpful for the stock market as well.
With everything slowing down and becoming sluggish in the capital market, will you still agree when people say that this is the time to buy, especially for the new investor in Indonesia, the local player?
If you have no exposure, yes, with every crisis or every sell-off comes an opportunity. But like I said, I wouldn't go aggressively buying. I would slowly accumulate with better averaging opportunities as well. Yeah.
Related to our portfolio investment here, what should be worried of actually? We are talking about many investors are still in the sideline.
Yes, I mean it depends what kind of assets you have invested into. If you're invested into bonds, I would take care of duration, because if US rates are going to begin to rise, then you should be invested into maybe shorter dated bonds, 3 to 5 years. If you're invested into stock markets, check the quality of your stock. I mean, if the company is going through negative cash flow, is under pressure, those are not stocks to buy. I would rather buy blue chip, good stocks with high dividend, good growth potential. So it's all being selective on what you want to choose. Yeah. So be selective in your stocks, cut down duration in your bonds. Depending on how aggressive of an investor you are, let's say if you used to keep 20% in cash, now maybe keep 30 to 40%, keep more cash, because I think with every crisis or with every sell-off comes opportunities. So we haven't got the best opportunity yet, but I am sure the markets will give us opportunity for better buys along the line.
If you may put it into the best list, what kind of assets will you propose for us to play in among bond and stock, let's say?
Okay, among bonds, I would buy emerging market bonds, but the ones that have sold off, but the very strong names, basically. And I would take care of duration on those bonds, yes. And if interest rate's still low, you can take advantage of even borrowing, leveraging, but keep your leverage under control.
All right. For the latest segment, Mr. Vicky, I would like to ask you, related to our core theme also this evening, about the portfolio diversification.
Yes.
After this one.
Thank you.
Make sure you are still with us on Economic Buzz. We are going to talk more about securing portfolio investment under the current market conditions. Stay tuned.